Welcome to another training of the lessons that's in that powerful manual that Lucy's talking about. So I want everybody to, y'all get ready to take some notes and pay close attention again, like we always do. But I want you to be a little bit more thorough with your paying attention, so we can make sure we get understanding. That's what we got. So we looking for understanding, clarity, and understanding tonight. So let's get into it. Let me reach over to Barbara, make sure she get us right, and get started. Over to you, Barbara.
Here we go with our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities. Thank you.
Thank you. All right, time for the quizzes. Who's ready? Y'all ready for the quizzes? Woo! Who are we? Dr. Mayor, you or Thor? Which one y'all gonna
Oh, I'm on.
do the honor? Okay.
Yes, I'm on tonight. Woo woo. You guys,
Yeah,
let's do it.
let's do it.
First one, to determine the monetary value that a commodity trades, you have to know the point value. True, false, not sure. To determine the monetary value that a commodity trades, you have to know the point value. True, false, or not sure.
True.
Not everybody say it all at once.
True.
All right.
True.
Miss Sully says true. P. Brooks says true. What do you say, Miss Laura?
I say true.
Okay. So we got 3 trues. Anybody else different than a true? Okay. The answer is true. Yay. Very good. Good job.
Yes.
The next question. This one was good. I like this one. Hopefully I get this one right. The grains, metals, and livestock all have the different contract size, but same point value. I'll say it again. The grains, the metals, and livestock all have a different contract size, but the same point value.
True.
So I'm seeing false in the chat,
False.
seeing false in the chat.
False.
And then I heard a true. Did I hear a true?
False.
Okay. I heard everybody's false so far. No
Yeah.
trues?
I think it's true.
Lee, you think it's true? Okay.
Did you hear me?
Lee,
Yeah.
yeah, I heard you. You said you think
you Fox.
you think it's true, you said, right?
Yeah, because I got in the tail end of this. So I'm looking at my book. I got it in one day, but I haven't had a chance to really look into it. And I'm kind of embarrassed because it makes sense to me. I'm trying to remember what they were talking about last week. And
It's okay. It's okay.
so
So the grains, the metals, and livestock all have different contract sizes. So you agree with that, right?
yes, yes,
Okay, very good.
have to.
But do they all have the same point value?
I thought they did from my understanding. That was my true. So I know that the contracts, I mean, whatever commodity you're dealing with, obviously they're different. They don't all fall in the same categories.
Correct. So you would have to look up the point value for the grains. You'd have to look up the point value for metals, and you'd have to
Right.
the point value for livestock and compare them to see if they all have the same point value. So you were correct on the first part, but the second part, they have different point values as well.
Okay,
Okay?
all right, that makes
So-
sense.
So the falses win on that one.
Okay, thank you.
All right. Very good. Back to you, Mr. Wright and Barbara and Mr. Johnny. Is
So,
Mr. Johnny?
Dr. Mayor, I'm actually excited about this part because I did a bonus question. And
I know, I saw that and I already figured out who won.
yeah,
I was like, what?
yeah. I'm so excited about it because when we were on the call and it kind of hit me that I wanted to give away something. I wanted to give away a surprise, oh, special prize. And then this bonus question last week, I had to redo it because I did a question that had a lot of answers that were all right. So the do over. And could you read the question before we announce the winner?
Absolutely, absolutely. The bonus question for this week, it says, a special prize to the person who is first with the correct answer. Team leaders are excluded on this question. So that means Mr. Wright, Mr. Johnny, Barbara, and Delvin and Melba could not answer. Okay, so Delvin says that he's long on December corn. Okay, and 402 with 2 contracts, and he stopped out at 421-6. What is my profit on that? And so you get to give them who the winner is, Delvin, since you're the one that's giving out the prize.
Yeah. I hope everybody enjoyed this question and had fun trying to come up with the answer. Because it definitely would have helped you with learning even if you tried to come up with the answer. But the correct answer is $1,975, 1975, and the winner is Alice. Is Alice on the call?
Is Miss Alice here on the call?
She was first to come in the room with the answer.
There she is. There she is. She's
Yay!
here. Woo-hoo!
Congratulations, Alice. That was the correct answer.
Thank you. Thank you.
1975. You just seemed like you had a hard time doing it. You was kind of quick to come in the room with your answer. Yeah, you was on it.
Well, I was 1 minute behind the first one.
Okay.
I was
Yeah,
1 minute.
yeah. I was like, man, she came in here quick. Well, great job. But I want you to know that with you won your registration paid for to the retreat.
Dang!
Wow, Miss
Yeah.
Alice, that's major.
Yes. Thank you. Thank
Wow,
you.
Miss
Yeah.
Alice, yay! This is
Yeah.
Thank you.
exciting.
Thank you.
Congrats. Great job.
Thank you. I
Man.
learned a lot from that question. That made me work it out. I try to.
Yeah, you
Thank
did good. Everybody did good. I seen so many people come in there and get the right answer after you, but it was going to the first person. But yeah, I'm actually excited. Can't wait to do another bonus question. Give away something else. But great job on that, and great job to everybody. I'm glad everybody participated on that. Awesome. So where we at tonight, Barbara? we got some more some good stuff to train about tonight, right? What you got for us tonight?
Yes, we do. Let's see.
Well, by now everybody know about this book, right?
Yes, they
If
do.
if you serious about this, if there's something you serious about learning, I recommend you get this book. Seriously, get this manual. If this is something you serious about, you really want to have this manual in your possession. It's going way more in depth than we get to talk about and go over on these calls. So do yourself a favor and get this manual if you're serious about learning how to trade.
So Delvin, can I say something?
Absolutely.
Even if you're not serious and you just kind of like inquisitive about what it is that we're excited about, get the book. You know, because for the person that's inquisitive and not quite serious because they don't even know what they want to be serious about yet, about what they're learning, because it all may sound like Greek still, get the book. The book tends to break it down in, I think, a more simpler term and easy to read, so that if you have the potential to be serious about it and it's something that would grab you and that you really would, really thrive with, the book will be a deciding factor for you. Because sometimes you come on the calls and the language may be a little bit much, but the book breaks it down really simple and it makes it, I think, a lot easier to grasp. So, yeah, that's my
Yeah,
take on the book.
great,
Yeah,
great point. Yeah,
yeah.
absolutely. All right. Yeah, I know I'm excited about this. And this is the retreat that Alice just won her registration paid for too. So I can't wait for April, y'all. I can't wait. Probably heard me say that before, but I'm serious about this one. I can't wait. So do yourself a favor. Matter of fact, make it a goal to make sure you're in Arizona in April. And Barbara, I think you got something new added this year that we haven't had before, right?
Yes, that is correct. We have a payment plan for everyone called Affirm. So it helps you be able to make monthly payments on your retreat ticket, just the retreat ticket part. So that helps. So that's a new added bonus for you guys this time.
Yes. Appreciate you doing that, Barbara. All right.
Very
Let's get going, Barbara. I'm so excited just to get into some more training. What we got?
yes. Well, we had homework assignment this
Mm-hmm.
past week, so I'm hoping we did have some people to complete it, and you guys did very well. So I want to congratulate everyone for taking the time and attempting to do the homework assignment. So I just appreciate that. You're going to get an assignment every week, and we're doing it to see how we can help you and to see what you've learned so far, because we want to make sure you're getting value out of the calls. We don't just want you to come onto the calls, but we want you to be able to learn from them and apply what you've learned from the call. So it helps if you just go in and take it, even if you may not really understand. Just make your best attempt. There's always going to be a section in there where you can um, ask questions or make comments as well. So just please, everyone, take time to get the homework assignment done. This past week was on point value, what we talked about on the last call. So just want to congratulate everyone.
Yes. Congratulations, everyone. Appreciate that. And as I said last week, I was trying to make sure I was getting the point across to make sure you understood the importance of point value. we have to know and understand point value if we're going to trade. It's just no way around it. If you're going to trade in the market, you got to understand the point value. You can't get in the market and trade something. The market starts to move. You in a trade, you don't know how much your profit is. You don't know how much your loss is. You got to know this. That's why we trying to make sure we spend enough time on it to make sure you do. Very important. Make sure we know how to understand the point value. Looking at a ticker and seeing how much the market moves don't mean nothing if you don't know the value of the points. So whenever the market moves, however many points, those points have a value. They have a monetary value. And that's what we're going over. That's what we're trying to understand. When the market moves this many points, that equals what monetary value? That's what the point value is. So again, take notes and pay close attention. So as we mentioned last time, this is a very big part of risk management, point value. Again, how would you know if you were keeping the golden rule if you don't know the point value? It's going to play into risk management so much. So all this is something that we got to make sure we understand. And I want y'all to, before I even get going, let me make sure I say this. I want y'all to not get discouraged, not get frustrated if you don't get it. That's okay. That's why we're going over it the way we're going over it. But do not get frustrated or discouraged about not understanding the point value. That's what Barbara just got through explaining. We want y'all to get this, and that's why we're going over it the way we are. All right? So, what you got, Barbara? You said point value and what else?
Yes. So we're going over the contract specification page, the point value, but this time for the mini and the micro contracts. And point value again is in lesson 8 and lesson 9 in the manual Futures and Commodities 101. So we just want to expose you guys to all the markets. We have larger markets, then we have those same markets that are broken down in smaller increments, making it feasible for everybody to be able to get into a contract. And they're called mini and micro contracts. So, and their point values are different from the larger contracts. So that's why we want to go over it with you.
Yes. All right. Let's jump into that then, Barbara. Let me read this. What is point value? Well, it says right here that point value is known as an increment in price. Remember I said when the market moves, however many points, those points have a value. And that's what this is saying. A movement can be in the direction of profit or loss with a monetary gain or loss. So no matter which commodity it is, it's going to have a point value. And we went over where to find it at in the contract specification. But when it comes to the market moving and up or down, doesn't matter. It's going to move at however many points it moves. And that value is determined by what the point value is. So that's why we say you have to know this in order to be able to trade, because this is one of the most important things to know. Okay, how much money am I losing? How much money am I making? I'll be the first to tell you, if you don't understand that, you need to get out of there. Go back to your studying. We don't want to get in the market, start trading, and not know what we're doing as far as how much the market is moving, how much we're making or losing, right? I can't stress that enough. So, and if anything y'all want to add at any point, don't hesitate to jump in. Okay. All right, Barbara. What is the purpose of micro and mini contracts? So I'm really glad that these contracts came about and were introduced because, in my opinion, it helps everybody be able to get in the market and trade. You know, started, we didn't have minis and micros. And then shortly after I started, the minis came about. And now they have micro contracts. But what that means is that you have a full contract, and then you have a smaller version of the same commodity, the same future contract, but it'd be a smaller contract size, and it could be a mini or a micro depending on the size of the contract, which means that it's going to have a different point value. So let's read some of these points. Provides more traders the opportunity to trade in the futures market. What I was just talking about. Smaller risk management. It's another point. The point value is smaller in mini and micro contracts. So that means that it's less risk than trading with the full contract because of the fact that it's a smaller contract. Market can move 10 points for the full contract, and then it'll move 10 points for the smaller contract. But because of the different contract size, the point value is different. So the monetary value and the profit and loss would be different. And the last point on here that it offers everyone. I can't see the bottom of that. What that last one say? Guess on my phone I wasn't able to see it. What was that last point?
Oh, I'm muted. It offers everyone
Offers
smaller risk
leverage.
management. Point value is smaller in mini and micro contracts.
Oh,
It
okay.
offers leverage, but at a smaller amount is what it does.
Yeah,
Yeah.
I see it now. I couldn't see it for some reason. All right. Very nice. Next, what's the next slide? What is the difference between the mini, the micro, and the mini? You want to cover this one, Barbara?
So most of you have minis and micros. So their point values and tick sizes are different. And so it's usually different by 1/10 of a size. That's primarily the difference between the micro and the mini contracts is that 1/10. So keep in mind their point value is not the same and the tick sizes are not the same. So that's the measured difference between those two contracts. So in other words, one of them is a little larger than the other. And so, of course, the margin and the maintenance is less in the micro than it is the mini. So the mini would be the bigger of the large, mini, and micro is the bigger one between the micro and the mini.
Yep. And just to point out, not all the groupings have a mini and a micro, but a lot of them do.
Yes.
And you said we're gonna look at contract specs on the mini.
Yes, we are. So let me go there now.
Which one were you thinking? Before I tell you which one.
I was going to go to corn.
Yeah. Since we started with that last week.
So here we go. This is corn mini December 25.
Well, let me ask you something, Barbara. I know how to go to the full contract, but if I'm looking for a mini, how do I get to the mini contract on the contract spec?
So you're going to click the futures tab. I'm not logged in a bar chart. You're going to click futures, and then it's going to say commodities groupings, and mini and micro futures is the last selection. So when I click there, it's going to give me a list of all the mini and micros throughout the different commodity groupings. So as you see, every market, like Delvin said, does not have a mini and a micro, but a lot of them do. So we're going to go to corn mini. We're going to click here, go to corn mini. And if you also notice, the symbols are also different for them as well than it is for the larger contract.
Hold a second, Barbara, before you.
Yes.
So everyone looking at this page, don't forget when you're looking at this page to figure out which contract month you're going to trade, you always have to look at liquidity. Okay? And the two columns that you're looking for liquidity is volume and open interest. So whichever contract size has the greater amount of volume and the greater amount of open interest, that's the contract month that you should choose to trade at any given time. Because remember, liquidity is important to be able to secure your bag and your bank account. A lot of these contracts will let you get into the trade, but if you do not have enough liquidity when you are in profit or loss and you want to get out of the trade, if there's no one to purchase your contract because you got into a contract month where the liquidity is low, you are stuck in that trade and you may not be able to get out to secure your bag with your profit or to get out and to minimize your losses because you picked a contract month. Like you see down where it says contract volume 0, open interest is like 10, like you don't want to pick contract months like that because your liquidity is not high enough. So you want to go with like December 2025, where it says volume is 749, open interest is 6,689. That's the most liquid of all of those mini contracts. And this is with whether you're in your micros, minis, or the regular contracts. I can't stress this enough because when I started this, Barbara and I, we got happy. And so we started, purchasing, stuff that did not have a high enough liquidity. And we thought we were going to make all this money and we could not get out of the trade. We were stuck, and we had to eat it, so I'm just letting you guys know, there's certain things that you have to pay attention to. All right, Barb, it's all yours.
Thank you. And even adding to what she said, if you want to know what volume and open interest mean, if you hover over these, it gives you the definition of what a column means. It tells you what volume is, the total number of shares or contracts traded for that day, the total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trade. So it'll tell you. So just so you know, if you happen to forget. So we're going to go to December 25. And this is your price overview page. And if you scroll it down, your contract specifications area of this page is right here. So this is where we're going to go to. So as you see, if you notice, when we was looking at corn last week, the large contract, how much was the point value last week? Do anybody remember for corn, for the large contract? What is the point value?
$50.
$50. So you see it's $10 for this one. And also the tick size is different if you notice. It's 1/8. Remember, Mr. Johnny said it's in eighths. It's 1/8 cent per bushel. The $12.50 that you see for the large contract of corn is $1.25 for this one, for the mini corn. And the micro is different from this one. So you got to be able to understand what these numbers mean. And the margin and maintenance is a lot lesser. So it's a lot easier for you, according to your account size or my account size or whomever, to get into this contract because you need $214 to get into this contract and maintain 195 at the end of each trading day. So this is your tick size for this one. Delvin, did you want to chime in?
Yeah,
Okay.
yeah. But the one thing I want to make sure we understand is why is the point value different, and why is the tick size different? Like Barbara just pointed out, because it's a smaller contract than the full contract, and that's why the margin, the point value, the tick size are all smaller or less because it's a smaller contract. Anybody remember the contract size for the full contract?
5,000.
5,000 bushels. And as you can see, I think I seen a message. Pam, did you put a message in the chat?
Yes, I was trying to see if she could make it larger. I can't expand it on my screen. It was just too
Oh,
small. That's all. I'm trying. I'm doing it on my phone and it's kind of hard to see.
There
So
you go. I made
thank
it
you.
bigger. You're welcome.
yeah. So yeah, the contract size is 1,000 bushels, and that's why you see what Barbara was pointing out, the fact that the point value and the tick size is a lot less. So when the market moves, let's say the market moves 1 cent, 1 point. How much is that 1 cent, 1 point? Can someone tell me? $10. We know last week we went over the full contract. When it moved 1 point, it's $50. But with this mini contract, it's $10. All right. So same thing that I used for my example when I talked about the tick size on the full contract. Remember I said when I see the -2 with the full contract, that meant $12.50 to me. And when I see the -4, it's 2 ticks. So now that's $25. But with the mini contract, as you can see, it's $1.25. So the -2 will be $1.25. If you see 1 point -2, that'd be $1.25 plus the $10. And the same thing with the -4. That'll be $2.50. So you're talking about $10 for the point, and the 2 ticks, $1.25 plus $1.25 will be $2.50. So if the market move 1-4, that will be 2 ticks, $1.25 plus $1.25. Okay, so just know it's a smaller contract, but it's the same as the full contract, just a smaller size. So that's why we're working with smaller numbers. 1,000 bushels instead of 5,000 bushels. Bob, I don't know if Johnny B was back with us or not, but
To say something.
yes, go ahead.
So as you mature in this, you're gonna want to start purchasing more than one contract. And when you start purchasing more than one contract with the micros and the minis, one of the things you have to keep in mind is you could very easily start purchasing several of these contracts instead of just purchasing one of the regular contracts, because it could add up to the same amount, but then you're paying more for the trade because each contract, you have to pay the broker per contract that you're purchasing. And so if you're going to buy one large contract, and pay the broker $5 to get into the trade, but it's going to take you, say, 4 of mini contracts to equal that one large contract, because you're not paying attention to your margin and maintenance. You're going to pay twice the amount for 4 mini contracts than you would pay for one contract of the large, and you're going to make the same amount, but you paid more in broker fees. So you have to keep that in mind too when you're dealing with the micros and the minis, and then you may want to double up on your contracts, make sure that you're paying attention to your broker fees when you're purchasing, say, one regular contract of corn versus 4 contracts of mini, which is going to equal to the same amount you would make with one contract of corn, regular corn contract. Hopefully, I'm not confusing you guys, because that's something I trade the micros and the minis, but I have to keep that in mind when I double up on contracts, that I'm not paying the broker more than I have to. Because every contract you're purchasing, the broker is charging you per contract. So you may be trading, it may be one trade to you, but you're getting charged by the broker per contract in that trade that you're purchasing. So remember that as well.
Yeah, great point, Dr. Mayor.
You know what would be good to have is an example to break that down. Because like what I posted as far as the earnings that I made on the last trade that I did
Mhm.
more than one. I did more than one contract. But because I'm doing with paper money, I might not be considering the full factor at hand. So I think a good breakdown of that will be good.
Okay, the first point we should think about in our breakdown will be the fact that all the platforms are gonna have a different fee break on the for the broker fee, for the commissions and the fees. So even if when we do an example, just know that yours could be different depending on the platform you are trading on. All right. So if I'm giving an example of me buying a contract and the fees that I would pay, and we're gonna use my fees in this example. That don't mean that's the same for everyone. All right. So if I buy one December coin contract, let's say I bought at 402, $4.02. About one December contract, and my broker fee for getting into the trade is $17.50. All right. Now, let's say I decide to get out of the contract at 410, 420. Doesn't matter what price I get out. I have the same 1750 in and 1750 out. So my fees would be $35 for that trade. 1750 to get in the trade, 1750 to get out. All right. Now let's say I decide I want to do the mini coin instead of doing the full contract. I'm gonna get 2 of the mini coins instead. And I'm buying the same price, 402. That doesn't matter. But when I get into the trade, because I bought 2 of them, it's gonna be, instead of being 1750, it's gonna be $35 in on my 2 mini contracts. And then when I sell at whatever price, it's gonna be $35 to get out of the 2 contracts. So the one December full contract, I paid $35 in fees total. With the 2 mini contracts, I paid $75 in fees total. Did that make sense, Adrian?
I think I kind of understand what you're saying. I think I kind of understand what you're saying. So you're paying for the contract to get in, and you're paying for the contract to get out.
Right. So I'm
I
paying
got you.
$17.50. If my fees on the broker is $17.50, it's gonna be $17.50 when I get in a trade or get out of a trade. If it's a
Okay.
full contract or a mini contract, I'm still paying the same fees. Okay. So
Mm-hmm.
when I buy the one full contract, the 1750 in and the 1750 out, that's a total of $35 on my broker fee. You with me? Then when I
Yeah.
get the mini
Yeah.
contract, I'm buying 2 minis. If I get 2 minis, that's gonna be 1750 plus 1750. So it's gonna be 35 going, getting into both of those mini contracts. and then it's gonna be 35 getting out of those two mini contracts. That's $70. I think I said 75, but it's $70. It's gonna be $70 for the two minis, and my fee for the one full contract will be 35.
Okay.
So I'm paying $70 in fees when I trade the two mini, and I'm paying $35 in fees when I trade the full contract. Now, if I were to trade three minis, it'll be $17.50 times three going in, and $17.50 times three going out. You see what I'm saying? That's what Dr. Melvin's talking about.
Does that price stay the same with every contract, or is that the broker's price?
Yeah, the fees, whatever the fees are that you pay on your platform, yeah, those fees gonna be the same unless you negotiate a different price. But yeah, it'll be the same. So I want to use an example using corn with a full contract, and then using an example getting two of the mini contracts. So you can see the difference
Yeah,
in what
thank
I'm
you.
paying fees. Did everybody understand that?
Yeah, I got it. Thank you very much.
Yes, I
Yeah.
understand.
Yes.
Yeah. And that's what she's talking about.
All right, that's great risk management, what she just gave, and really
Yes.
managing your account itself, because you do have to consider the fees. And another thing you have to consider is your margin and maintenance. That's why we like to talk about the minis and the micros, because if you want to do multiple contracts, say you wanted 3 contracts, that's 214 times 3, that's 642 you got to have in your account, versus if you did the big contract. I think the margin is 1,300 something, around that amount, 1,300 or $1,400. You need $3,900 right off the bat for your account. So it's a good way to build up your account by trading the minis and the micros, all while managing your account and working your stepping your way up to trading larger accounts. So all of that has to do with risk management and account management per se, has a lot to do with that. So you want to be, mindful of what contracts you get in.
And you know what? You're right, Barbara. A lot of people have started out with minis to start out and build up from there, right?
Exactly. It's a really good strategy, a way to do it. And it's a lot, think about it, it's a lot easier to get more than one contract in corn mini than it is the large corn, because of the margin is about probably $1,000, $1,100 difference in margin that you're working with, that you would have to have in your account. So you could easily get more than one contract in this one.
Yeah, and let's just take a look at this. Just look at that, see how it looks. Okay, coin moved 10 points, 10 cents, Barbara. With the full contract, we know that'd be 10 times 50.
Mm-hmm.
That's a $500 move, right?
Yep.
With the mini contract, the point value is $10. So if coin moved 10 points or 10 cents, whichever one you want to call it, it's 10 times 10. That's $100. So when you're working with a smaller account, the market going 10 points against you, and you down $100 versus the market going 10 points against you and you down $500. That's the difference between trading with a mini contract and trading with a full contract. Hope this makes sense to everybody. So
Yeah.
that's why Barbara said in the beginning that it's a way for everybody to get in the market depending on where you at with your account size and your risk appetite. So I like the minis because it gives another option. And we're talking about grains right now, but Barbara and Dr. Melvin can tell you when you get into the other groupings, you got to go with the minis whether you want to or not, because some of those margins on the full contract will price you right out the market.
Ooh. I mean, they're way up there.
Yeah,
In the double digit thousands.
yeah. Some of the
High.
markets, yeah, some of the markets you got to go with the minis anyway. But I like the minis because of the fact that it opens up opportunity for everybody. But also, if you got a smaller risk appetite, then the example I just gave you, hope that makes sense. That 10-point move is a big difference between the uh the point, how much the monetary value is with 10 points moving in the market.
Yeah, that's
Anything
what I
else?
read. That's what I read too. That you're better off dealing with the minis than the micros.
Yeah, it's it's a huge difference in the point in the contract size. It's a smaller contract, and first perfect example, the smallest contract I've seen in the futures market, and the smallest margin I've seen in the futures market so far is Ether, micro Ether, and I remember at one point the margin, the maintenance, and the margin was so low. The margin was like $46. I don't even know what it is now, but the contract size is real small to the point that you got to trade a lot of contracts just to make it worth your while when the market moves because the contract being so small. Yep. So all good stuff, y'all. So we went over the full contract last week with corn, and now we're looking at the mini contract, and the difference is the contract size, which makes it have a different point value and a different tick size. And of course, that means it has a smaller and a less margin and maintenance. So it's basically going to move just like the full contract for the most part. If you look at December corn, the full contract, and it moved 10 points, most of the time you're going to go and look at the mini, and it's going to be moving 10 points too, right along with the big one. The only difference is the fact that one is a smaller contract than the other. But if you was looking at the margin last week saying, whoa, man, I don't know if I can afford that, then here's a smaller version of the same contract with a whole lot less risk amount of money you have to risk to get into it. So with Robert, I think you said something about we had a homework assignment.
We did have a homework assignment, so I'm gonna ask a question based off of what we have on the screen now. If you didn't know what the point value was, say you didn't know it was $10, how would you determine what the point value was for corn mini without knowing that it's $10, without seeing the $10 here? How would you come up with that? Who know the answer to it? What would you do to come up with that, to say, oh, it's $10? How would you know?
The tick size times the contract size?
Yes, give us the example. What would you do to determine that to get to $10?
So you would take the $1.25 and divide it into the contract? Or multiply by the contract? Hold on. No, that's wrong. Hold on.
You're on the right road. You're on the right track.
Hmm. Let's see. I'm looking at my notes.
This is how we learn, y'all.
See
We all learn together.
the vault is it, what did I say? The contract size?
Yeah,
Times the
you're looking at the tick size and the amount per contract. How would you know? So remember, Mr. Johnny told us last week you want to take that fraction, you
the
want to
decimal.
divide it. What's 1 divided by 8?
Okay. Got it. Should be 10, right?
What's 1 divided by 8? That's where you started with it to determine. What's 1 divided by 8?
0.125.
0.125.
Yeah, so turn it to a decimal.
So it takes 8 of those to get 1 cent. So if you take that 125 and you know if it take 8 of those and you multiply 8 times 125, what does it give you?
$10.
Gives you
$10.
$10. That's how you do it. You
Okay.
have to look at the tick size, that 1/8. If you take it and you say 1 divided by 8, gonna give me 0.125. Remember, in the big contract, it's 1/4. So if you divide 1 by 4, it's 0.25 if you do it that way. But this one is a smaller one. It's in eighths, remember. So you want to divide it and let it give you a decimal. And when it does, if you do that, multiply it times 8, that's 1 cent. So you want to do 125 times 8 because it takes 8 to get to that. That's 10. So you take the amount per contract, multiply it times 8, that gives you $10. That's how you always can determine the point value without you coming over here and looking and seeing that the point value is $10. But the good thing about this, like Mr. Johnny says, it does the math for you. It gives it to you. But we want you to know how they derived to these numbers so that you would really know and understand the risk management and really understand leverage of how much control you have in the market. You're controlling 1,000 bushels based off of only having to have $214 in your account and whatever your stop loss amount is. That's a lot of bushels to control. But that's literally what you're controlling every time you get in a contract versus the big one, you're controlling 5,000 bushels. That's a lot of trucks for 5,000 bushels, but that's the power that you have as a small speculator in the marketplace, in futures and commodities market. So it's important to know that. But that's how you would determine that. And you just have to do it over and over again. The more you do it, the more you would get it. It's simple math, but it's repetition is what's going to help you learn it, because that's what helped me. I have to do it over and over again to get it. So did everybody understand that?
I have a question.
Yes.
So is there a time, like in the tick size here, it says 1/8 of a cent. Is there ever a time when it's different? Like, is it always going to be 1/8 or can it be something less than or more than?
Well, Delvin probably could better answer that, but as far as I know, it's going to be 1/8 unless they change it, unless it's
Okay.
changed. Is that correct, Delvin?
Okay.
As long as that contract size stays the same, it's
Okay.
gonna always be the same. Yeah.
Thanks.
Hi, Barbara. Good night.
Hi there, Miss Inga.
Hi, I just want to ask while we're on on these in this area here, I'm seeing exchange CBO2 CB 0T. I understand what the point value is, the $10. You just explained that. And understanding the margin maintenance, you must have 214 in your account. What the 195 is about?
That's the maintenance. So just as long as you're in the contract, at the end of the day, you have to maintain $195 in your account to stay in it. So
All
the
right.
moment your account drops below this, you're going to get a call from your broker saying you need some more money in your account. So that's what the maintenance means. You have to maintain this. Just
Right.
if you're in it 2 weeks or 3 weeks or 2 days, you have to show this at the end of the trading day. That's what the maintenance means.
Can I say?
What the exchange CBOT
Yeah, I
is
think
about?
Dr. Melba wanted to say something. We'll get to
Okay,
that one.
sure.
Okay, Dr. Melba, I think she wanted to say something.
Before we move on, Miss Inga, that's a really good question, but you have to
Thank you.
recognize what is going to make your account decrease to less than $195. Do you have an understanding of what would cause your account? Because you started with 200 and they wouldn't let you in the trade. The broker would not let you in the trade if you not have $214 in your brokerage account to enter the trade, correct?
Right.
So what would cause your account to be less than 195?
Well, that is if you made a loss on the account on the trade.
Excellent. So before you get into a trade, whatever you've calculated your losses are going to be, because you have to know how much you're going to profit in a trade and how much you
Mhm.
can potentially lose in a trade before you enter a trade.
Right.
Okay? And all of that has to be written down. You have to, it's like a plan. Each trade, you have to plan it, you have to write that all down. So whatever your possible losses are, you have to make sure that you have that in your account along with that $214 or along with that 195, because your account, if it goes less than 214 or less than 195, you have to make sure that you continue to put money in it to stay in the trade. So you have to
Right.
plan all of that before you enter the trade. You don't want to be in the middle of a trade with the broker calling you and saying you have less than your maintenance in your account and you have to add. You plan that all out before you enter your trade.
So all this will be considered risk management as I go into the trade.
Absolutely.
Yeah.
Yeah.
Thank you.
Very good.
That's one of
Thank
our
you.
rules. What Dr. Melba just said, have a plan. That's one of
Yeah.
our rules too. So this goes back to our rules. And Adelvin is good about telling us never get in a trade that you can barely afford. You got to be able to afford it, because what Dr. Melba is saying, some of the markets are very volatile and they move a lot during the day and you could easily get stopped out. So you have to manage, you have to do all of that, determine all of that before you can get in a trade. That's what she was saying. And that goes back to our first training call on rules.
All right. So while we are
Let me
here,
jump in here. Let me jump in there, Barbara, because I was getting ready to make a point, because that's a great point what Dr. Melville was bringing up
Yes.
when she was asking Ms. Engel, how would you um, end up with less than 195 in your account? And what Ms. Engel said was very true. You could be losing on the trade, and that's what would cause you to fall up under 195. But that's not the only way. That's why I feel like this is a really great point that Dr. Melville was bringing up. But that's why we also want you to think of maintenance as balance, because it's the balance that you need to maintain. So that's why I always tell you guys to think of that word as balance instead of maintenance to help you get it. But the other thing, going back to, here's another way how you can end up under 195. Trust me, Delvin's been there many times. Going back to the rules, if you notice some of our rules, one of the rules is know your positions in the market. And another rule is to not take on not to have too many trades. If you could be in another trade as well as this coin trade, and whatever going on with the other trade can affect this trade. So if you're not making money on this one, maybe you breaking even, you ain't losing or breaking or making no money on the coin trade, but say you have another trade going on with the natural gas where you are losing money, and that can bring your balance down because you're losing so much money over here on this other trade. So having on too many positions that your account can't handle is another way where you can get in the position where you have to add more money. So keep that in mind as well. That's why you don't want to have too many trades on based on your account size. So again, that's another way how you can become under the maintenance in one trade based on something else you're trading. So keep that in mind as well.
I also think what you're saying makes sense as a new trader. I don't think as a new trader, well, at least I don't see myself as a person starting to trade, doing 2 and 3 trades at the same time, because you're learning and it's new to you and you want to watch and learn as you go along. I don't think it is the best thing as a new trader, even if it is micro accounts, to do too many trades at the same time. At least that is how I would work my my trades.
Yeah. And that's one of the main reasons we do what we're doing. I don't want you to make the same mistakes I did. So that's why we doing this. Because I did that. So yeah.
And you have to remember, everybody's risk appetite is different, Miss Inga. And
Mhm.
you know, where your risk appetite may be one thing, somebody has a total different risk appetite, because you always have to remember, you never go into the market with funds that you're not able to lose. And
Right.
everybody has a different risk appetite as far as what they're able to lose, and they're fine with it. Somebody can lose 10,000 and it's no problem. Another person, if they lose 1,000, that's their mortgage money because they weren't supposed to even use that in the trading arena. And so
Okay.
everybody's like I'm saying, so you're making your judgment call for your strategy and your plan based upon your risk appetite, and someone else is doing the same for theirs based upon what their risk appetite is. So everybody on this call has a different risk appetite, and everyone has to make that decision for themselves individually. But we're giving everyone the same general information, but each person has to figure out what their risk appetite is.
Okay.
Yeah.
Point taken. Yes.
And does
Um.
I want to make sure, I'm sure everybody does, that everybody has registered for a free account on BarChart, correct?
No,
Yes.
Yes.
Yeah.
Yeah. So on your BarChart account, you can have a watch list. And you should have a watch list. If you're watching the markets, got something that you're looking at that you're watching, you should have a watch list. Add it to your watch list. When you go on the bar chart, you can go to your watch list and watch the markets that you want to watch without having to go all through all the groupings. Just go straight to your watch list. But another thing you can do is you can have in your account where you can kind of manage and keep up with what you're trading and how your trading is going and how your accounts are going. Your account is going. And that's another thing I do on bar chart is where I can manage and keep up what's going on with my account with my broker. You can do something similar on bar chart. So please make sure you get your free count on bar chart. And we'll have to do a training where I can kind of go over and show y'all how to do that on bar chart. So we won't be on too late. But um, you can you can manage and kind of have an account where you can keep up with trades you've done and kind of see where your account is and do the same thing on bar chart.
I'm glad you mentioned that. I missed so many setups on Weibo, trying to use it on my phone that I missed alerts that I set up for.
Mm-hmm.
I'm glad you mentioned that. So I'll definitely start doing that.
Yeah, and I on another call I'll show y'all how that works. Matter of fact, real quick, just to show you what I'm talking about. We won't go over it, but Barbara, can you stop sharing for a second? Allow me to share. Let me just to show y'all what I mean. Can y'all see my screen?
Yeah.
Yes.
Yeah.
Okay. So when, up at the top next to futures, you see where it says watch list?
Yes.
When I tap on my watch list, this will pull up the markets that I'm watching. Of course, you can see it's a couple of them I need to get rid of. I still got corn and soybean from 2023 on here, but these are what's on my watch list right now. Okay. And also, what I meant when I was talking earlier, I can go over here. See, you see the menu button at the top right?
Yes.
Mm-hmm.
So when I tap on those lines up there, you can see my watch list, but you also see where it says my portfolio.
Yes.
So when I tap on my portfolio, this will pull up my account, and you can see what's in my portfolio. Now I'm not still trading soybeans from 2015, but it's still in here. But when I get through with a trade, like I just had the silver trade, when I get through with a trade, I come over here and I add it to my account. So when I add it to my account, it'll keep adjusting what's in my account, and I can keep a history of the different trades that I'm making. So when I hit edit, I can come right here, and I have multiple. I come right here and I can add and change that. But I'm gonna show y'all how to do this. But you can keep a log of your trades up under your portfolio, and you can also uh, put in price where you enter the trade, exit the trade, and it's gonna keep adjusting your balance. And you can watch and keep up with your account on bar chart like it's your regular account on your platform wherever you trade at. It's just another way to help you keep up with what's going on in your account. So I keep mine the same way on bar chart like I do my real account. But I come over here after I do a trade and I update and put that trade in, and it's gonna edit and update my account balance, and it keep me history. But like I said, there's now I go here. These are different accounts. You see, I got multiple accounts on here, but this allows me to keep up with my trades. I don't have to go to my broker account because I got the same information over on my regular account. And we'll do a training where I can show y'all how that works, but it's real simple. But keep a watch list, and if you want to set up a portfolio, we'll do a little quick training on that one night when we plan for it. All right.
Oh, to get my play money account up like that.
Oh yeah. And see, the most important thing, Adrian, man, I'm gonna tell you what you want to do is you want to, as you paper trade, man, you want to paper trade like you trade with real money, and grow that account and trade that account like it's your real money account, and keep trading it, keep trading it.
Yeah.
Most important thing you want to do is you want to trade. I'm gonna tell you what Dr. Melba do. I hope she already with me telling y'all. Every time she get in a trade, she do a live trade and she do the same trade as a paper trade. And I think that's an excellent idea. Get into a trade and have it as a demo trade and have it as a live trade, and you can really learn and grow that way.
Yeah, and my little trial and error venture has been working for me, just using everything that I learned from you guys, doing the training with the 1, 2, 3 and doing support and resistance line. Yeah, I went down to like 989, but I'm back up to like 997. So I started with $1 million. So I'm just trying to work myself to where I have positive results.
Yeah. There you go. Great job, bro.
Thank you. And I
And I wasn't even
appreciate
familiar
you.
with that platform too. That platform that you posted, I was like, wait a minute, what are you using? But I didn't even know you could trade futures on that.
Yeah, I use Webull and I have account with Charles Schwab.
Yeah. Okay. Excellent. So any questions or comments about what we went over tonight?